But let me also get straight to our next guest who joins in. Mastek is a stock that's on our radar. The company has been reeling under pressure because of Brexit uncertainties, as the company derives 70% of its revenues from the United Kingdom. But with hopes of a Brexit resolution now getting stronger, the stock saw a bit of a relief rally yesterday and is gaining further 3% today. Abhishek Singh, the Group CFO of Mastek, joins us on the line to talk about all of that. By the way, they also announced their numbers, and margins were at an 8-quarter low of 11.7%. So there are definitely some challenges. Abhishek, hi, good morning, and thanks for joining us. If a Brexit deal is announced, and as and when there's more clarity, do you hope to see a quick turnaround in business, or is FY20 going to be a challenging year for the company?
Good morning, Sonia. Thanks for having me. Brexit has been an overhang on our business and on our stock for a very, very long time. And we have said this earlier. It's not a doomsday as it sounds, and it's by the same token, it's not a solution as it got announced yesterday. There was a bit of a euphoria in the market. You could see it in our stock. You could see it in the forex market as well. But there is a distance to be covered, and there are stuff to be resolved between EU and UK, between the parties in Northern Ireland, DUP, and the UK government on the Irish border. So there are stuff that they have to cover. But what it basically does for a company like us is there is a decision, and we do believe that it'll free up the administrative or the bureaucratic bandwidth to make decisions on the businesses that for us has been in the pipeline and not been adjudicated. So we view it positively, but we do want to qualify that it'll be a crawl back and not a bounce back for us.
Okay. For the very near term though, Abhishek, the margins of the company have hit an 8-quarter low. What was the impact of the wage hikes, and should we expect some more pressure in the second half of the year?
So the impact on the margin was well understood by us, and it was a conscious call, and I'm happy to demystify it. The first one was that we accorded a wage hike to the digital workforce. These are scarce skills. These are the skills that we have painstakingly trained and built over a period of time. So you got to take care of that, business or otherwise. So the impact of that was right around possibly 1.3% quarter on quarter. And then there were two other events that happened within the quarter that just kind of artificially deflated it, which we expect to kind of give way over coming quarters. The first one was that our conscious call to come out of the government business in India. And so there was some provisions on the debt that we took this quarter to kind of clean that up. That was possibly around 80 bips. And there was the employee-related exit charges that came in at around 50 bips. So these possibly constituted 2.5% impact, and then the efficiency and stuff that we have been working on through and through gave us the cushion. So the net impact that you see there is possibly around 150 bips quarter on quarter.
Okay, well, my colleague Surbhi has also joined in for the rest of the show. Hi, Surbhi, morning.
Hi, Sonia. Good morning. Well, yeah, I think we're trying to understand what the Brexit impact is going to be, if indeed they get a ratification from the British Parliament on Saturday. Abhishek, so I want to come back to that point, and I understand what you said about how this is going to be a gradual climb up and not a very quick bounce back. Now, in July, you did tell us that a lot of the companies that you work with in the UK, I mean, you're seeing a bit of a delay and deferment in terms of decision making. Because of the whole Brexit overhang. Now, if we work with the assumption that the deal is ratified and it really goes through, then what kind of a pickup do you see in your UK business? And the fact that this has been a slow quarter for you on the top line front, how much of that would you attribute to this Brexit uncertainty?
I would say a fair bit of that will be attributed to Brexit, and it's little to do with uncertainty. I will qualify it again that our business is not impacted by Brexit or no Brexit. It was just about, or rather deal or no deal. It was about any deal was good for the business as long as the bureaucratic capability came back to make the decisions for the businesses that we service. Take, for example, NHS. And in last 60 to 90 days, NHS has been just busy building the stock to service the citizens. And any other discretionary spend or focus was just on serving the day-to-day activities. So 7,000 of the 9,000 medicines that they prescribe is important into UK. So all that they were doing was just building the stock of that. Now this takes a significant capability, or rather the bandwidth, away, and they're looking at the immediate challenge. Now we expect that we can engage with them meaningfully and start building on it. that's the kind of distraction that we had. Fundamentally for us, as long as there is a deal and decision is made, whether it is hard or soft, it doesn't impact us. What is important is we need the decision makers to come back on the table and start adjudicating the contracts or the businesses that we service them on. So our expectation is that we'll see some positive upswing as far as Q4 is concerned. We're getting into now, October will give way for the holiday seasons, and as is the business slows down. It's a known thing in the services, especially ID services business. So we don't expect anything major in Q3, but in the Q4, we would expect the deal velocity to show upward momentum.
Surely all your stakeholders would hope for the same. Now, you gave us a couple of reasons why there was a hit on the margins this time around. Are you expecting margins to also show this bounce by Q4? And for the year as a whole, what should we expect both on the top line, and what would be the exit rate on margins by the time you end this year?
So instead of giving a percentage, the expectation very clearly is that we get back to the last Q4, Q1 kind of references, which is comfortable. We know that we would have absorbed our wage hike. The growth would bring in the disproportionate impact to the bottom line. So we feel very comfortable that we'll come back to those levels exit of the year.
Well, Abhishek, we will touch base with you once again. Thanks so much for joining us and speaking to CNBC TV18. That's the word coming in from Mastek. Brexit may not have an impact. There are, of course, a lot of other challenges that lie for the business, but Brexit may actually aid the decision making and free up the administrative bandwidth. So that's the word coming in on Mastek. But let's do one thing. BHEL is still the stock on our radar right now. It may be added to the list of